Our agenda today will be the following. First, we should agree what is the goal of the company. Then what should be the metrics? Why do we measure anything? And now there's a word called TOC. Very few of you may not know it, but let me just clarify, it stands for theory of constraints, not tea or coffee. And then this concept called free cash flow. Friends from finance fraternity will definitely know it, but to my mind, if I have to cover anything out of the entire thing, this free cash flow thing is the only thing which matters. You may be aware that we work on the principles of theory of constraints. So I must share what is this concept of constraint. Constraint does not mean obstacle. I'll explain in more detail as we go along. Then what are the 5 focusing steps? Dr. Goldratt had termed it process of ongoing improvement. Then I'm going to cover, there are only 4 physical constraints, only 4. Either you may not have sufficient supplies, basically raw materials and components, operations, orders, or cash. Then how do we take decision based on cash to cash cycle time? And finally, what can we do to improve our cash flow? This is the broad agenda. Time permitting, I may add 1 or 2 things more, but otherwise this is what I'm planning to do today. Let's start first. What is the goal of the organization? Please see something very interesting. I've not asked you what are the goals of your organization. Singular goal. Just to give you the example, since most of you are from India and will be familiar with cricket, what is the goal of any cricket team playing in a match? Or for that matter, hockey or any team, what is their goal? It goes without saying, it is to win the match. Not how to score more goals than your opponent teams, not to make more runs than your opponent teams. Those are the measure by which you achieve your goal. But the goal of is every organization is to win the match for every team which is playing in a match. Now, one important thing is there, like there's a goal of every team, sporting team, every company must also have its goal. And irrespective of the goal, whatever it is, but don't you agree that every single participant in the organization, every employee must also agree to that? Must. You cannot say, if I take the analogy of a cricket, that my goal is to win, but the opening batsman says, no, you could be your goal. My goal is to make a century. Or the bowler says, I have to get 5 wickets. Or another bowler says, I should not leak runs. Then will be a disaster. So first step which you can take even today, right today, please have a discussion first among your senior colleagues, what is the goal and its measurement? Just these 2 questions. The very first, what is the goal of your organization and how will you measure it? You can choose whatever you want. Financial, non-financial, I don't care. But it has to be the same for your entire organization. But at least to start with, I would suggest the CEO or the MD and his or her direct reports, all functional heads, what I call the dirty dozen, they have to together must agree on the goal of the company. And once these 10, 12, 15 people agree that this is the goal, then they have to take it down to the last person to say that this is the goal we have. What is your role? We will tell you. But right now, and first understand, this is the goal of the company. Now, today, in any company I have gone, if I ask the same question, never once I have in my life, I have got that all of them have agreed to the same goal. Incidentally, it's not an easy process, I must say that. Question looks simple, but not everyone or every organization can do it very rapidly. In fact, in one company, its name is DHFL Pramerica Life Insurance Company. It almost took 6 months to arrive the goal and its measurement. Just 6 months it took. So it's not an easy answer. It's a tough thing, but without this, we can't proceed. Before you go and play any game, you must agree what is our goal today. Now comes, the goal has to be totally clear and unambiguous. Now I see a lot of nonsense going in the world because we use a lot of English words, and English words is not a pleasant term. I'm using for bullshit. I don't want to use it in future here. So when I say English, it means literally BS. Oh, we want to be world class. We want to be most customer friendly. We want to be satisfy all stakeholders. MBS, please note, this is the most common language I get from them. Reality is it's all nonsense. You only care for yourself. Let me explain to you. How many of you measure? How many of you measure if have you paid all the money to your suppliers on time? And how much is overdue payments as on today? I'm not saying you give it. You may not have the money to give it, but do you measure it even? If you don't measure it even, what nonsense we are talking about being satisfying all stakeholders, etc., etc., etc. So please don't fool the world. I have no problem, but don't start fooling yourself. Don't start fooling yourself. The measurement has to be very clear. Now I'm going to share 2-3 of them. Typically, it's very fashionable to say the goal is to satisfy the customer. Very, very fashionable. Of course, it's not the case, because look at your experience with your suppliers. It's not very, it's not the experience you are having that your customers are, your vendors are satisfying you very much. But let's say for the time being, the goal is to satisfy your customers now as well as in the future. Simple question. Is it possible for you to satisfy your customers for long if your employees are not happy? Some responses I want on the chat box. Ira, you can read them for me.
Yes. No, not in the long term. Not possible. No, everyone.
Okay. Okay. So the very first thing, each one of us agree, each one of us, that in order to satisfy the customers, the minimum requirement is that we have to satisfy all our employees, all. Now, if we have to satisfy employees, is it a must that we make money? Can we satisfy our employees if we are not making money? Any question? Any doubt? Please respond on the chat box.
No, everyone is saying, no, we have to make money.
So look, where did we start and where are we coming to? In order to satisfy the customers, we must satisfy our employees now as well as in the future. And in order to satisfy our employees, it is imperative that we must make money now as well as in the future. Now, you may see from the presentation that I'm writing something, making more and more money. Why I'm using the word more and more? Very simple. There's an expectation, right or wrong, I'm not discussing. Every employee wants more money next year, irrespective of the inflation, irrespective of his or her performance. It's an assumption that our salaries must go up. Now, is it possible that whatever we are making money now, we continue to make money, it's the same money, but our salaries of our employees should keep on going up? Is it possible? Please give a response.
No.
Okay.
No.
So what it says, basically, in order to satisfy my customers today, I must make more and more money now as well as in the future. You can try the same thing from starting with the employee satisfaction and you will come to the same. I'll just explain to you. But what is the necessary condition for making more and more money now as well as in future? Obviously, without satisfying my customers, I can't make more money. Do you agree? If we are not satisfying our customers, two things will happen. One, they will not give us any more orders, or sometimes they may have a problem because the other vendors are equally bad in their delivery or service. They may ask you to reduce the price. So which means in order to make more and more money, now as well in the future, we do not have a choice. We have to satisfy our customers more and more. Do you all agree? And can you see from here, there is a circle happening. Satisfy the customer, requirement, satisfy the employees. Satisfy the employee, requirement, make more and more money. Make more and more money, satisfy the customer. Satisfy the customer, now comes back employee satisfaction. Now making more and more money. So irrespective which of the goal you try to start with, they're all interrelated. Now we come to the second line. I'm saying the goal has to be absolutely clear and unambiguous. Now measuring customer satisfaction, how easy it is? It depends. If one customer had ordered only once from you and he had a bad experience in the very first time, his answer is clear, you're lousy. I had bad experience with a very well-known company in the world. The name is Toyota, Toyota Motor Company. I purchased one vehicle, 2007, 13 years. I had such a horrible experience. And on the other side, I've been giving the example of Toyota Motor Company like anything. But for me, my experience of Toyota Motor Company is the most terrible. Now, Prakash may be there. Prakash, if you're there.
I'm not sure if he has joined.
No problem. So what happens, measuring the customer satisfaction, it depends which customer and what was his last experience. Similarly, for an employee, I'm taking an extreme example. In your company, many of you who are employees have joined here. Let's say you got a very good increment this year, or bonus, let me not call it increment. You got an increment of 10 lakh rupees. Or Omid and the people who are doing from outside, let's say $1 million. I'm just taking an obnoxious number, very large number. You got a very large number as your bonus. But the moment you are feeling so good about it and feeling very proud about it, you realize you're another person working in the same function as you, whom you are thinking he should be thrown out of the company, he got a $2 million bonus. What happens to your satisfaction? It's gone, totally gone. So measuring customer satisfaction is quite confusing. Measuring employee satisfaction is no, going to give you the same results. It depends what time and whom have you asked. However, comparatively, there's one more thing which we can measure more reliably than the other two, is making money. Even here, making money is also not very clear to most people. Even the accountants, they can change the way you want it. In fact, the definition of a good accountant is, when he's asked how much profit we have made, he said, what you want it to be. I'll make it as per that. I'll explain you in a few minutes. But out of the three, measuring money is comparatively easier. Is it clear to everyone? I'm assuming it is, so I'm just proceeding. Now, there are three good financial measurements. One is called profit, another is called return on investment, another is free cash flow. Now, before you talk about profit, let me tell you one more nonsense parameter called EBITDA. Earning before depreciation, interest, amortization, etc., etc. Most useless parameter, but a lot of companies use it. What it means that we are not taking into account the impact of interest, impact of depreciation, impact of tax, and something called amortization. That means you spend the money today, but you don't account in your expenses. It's the most stupid measurement. I will not go into more detail. Now let's go to two more parameters. Then someone tells me something called cash profit. Whenever you hear this word cash profit, you know what it means? This is not adequate enough to cover depreciation. That's why they use the word cash profit. Once again, this is the most stupid thing. For a good enough parameter, I would either take profit after tax, or if I make it more simple, for the time being, I'll take profit before tax. At the same time, profit before tax does not mean that everything is great. You might have made a huge profit in your books. Profit is determined by many things, and your depreciation policy, your revenue realizing policy, and so on. And these are all paper stuff, frankly, all nonsense, if I can use it. Then another parameter is called return on investment. Two companies can make very nearly the same profit before tax or after tax, but that does not mean they have made the same amount of money. For example, one company makes $100 million profit on a turnover of $1 billion. Sorry, not a turnover, on an investment of $1 billion. So very roughly, the rate of interest or return on capital employed is about 10%. But another company also made the same $100 million profit, but it invested $2 billion of its money. So its return on investment is about 5%. Now you can see, even though the profit is the same, but ROI is quite different. So two companies having identical profits, we cannot say they have done equally well financially. However, even this is not enough. There's a third parameter called free cash flow. This I will spend a little bit more time to explain. Two companies can have identical net profit, $1 billion investment, $100 million profit after tax. I'm using the word even after tax. So ROI is 10%. Two companies identical. Now, it is quite possible for one company, all the money is stuck with their vendors, with their customers and inventories. And for another person, all the money is lying in their bank. Even though both have them $1 billion as investment, for once, the money, for one company, company A, the money is stuck with their customers as well as in the inventories, whereas the other company, it is in their bank. And I can give you an example of Hero MotoCorp. Hero MotoCorp is one of the most profitable companies in the world, at least in India. I don't know, Ravi Sood is still there. He was the chief financial officer till a few years back. Ravi, are you here?
I don't think so.
Okay, he has left perhaps. Now, you may be knowing that it was very, very profitable. It is very profitable. But about a month back or 15 days back, there was a newspaper report that it has said that it will not be able to pay its vendors because they are not able to get their money from their dealers. Yes, they are not getting their money from the dealers. And what about all the profits they had all these years? Perhaps it were given to intercorporate deposits. It was invested in mutual funds or the stock market. And you all know what has happened to the stock market. They cannot encash it in today because it will entail huge loss, 30–40% loss. And if they have given on intercorporate loans, people are just not paying back. So frankly, the one parameter which matters the most is free cash flow, or cash in your hand, if I can call it. I'll explain a little bit more here. Many of us, in fact, most of us are stuck at the home. Now, today, if you have to buy something, it doesn't matter how much money you have got in the shares. It does not matter how many buildings you are having, how many properties you are having. When a vegetable seller comes to sell you something, he wants cash, hard cash, or one of these electronic payment, Paytm or something like that. So if you don't have cash or Paytm or credit card, it doesn't matter where else is your money stuck. It's of no use. So the single largest parameter, in my opinion, which is important, is free cash flow. I'll explain you in more detail. In fact, free cash flow has been linked like the blood in your life, in your body. If you have adequate amount, it doesn't matter. But if it is not, then nothing else matters. Now, most of the people are not at the apex level in a company. For an average employee, understanding what does he do today morning or in the evening and what is its effect on profit, ROI or free cash flow is almost next to impossible. I'll prove it to you. Any managing director or CEO or the founder available in the company right now, the apex level, or even a CFO will do for me. Please respond in a chat box.
Yeah, several people have joined.
Okay, one simple question to them. What was your free cash flow for the month of February? Let me modify. Do you precisely know your free cash flow for the month of February?
So one response is no idea. One person has given a figure, 20 crores. I think that is Prasad Rao from IFF.
Okay.
But mostly it is no idea, don't know.
Right. That's good enough. See, that is the most important thing. If you don't even know what is your free cash flow, you can understand the single largest parameter which is most important for you running the business. You don't even measure it. Unfortunately, that's, I call it, I'm using the very harsh word. Most of the people at the apex level in the world, they're financially illiterate. By the way, I have never attended any finance class. I'm not a CA, I'm not a chartered accountant, I'm not a cost accountant. Yet I'm using these words because I find if there was one parameter, every owner, every CFO should know it. How much money do I have in the bank? How much did I make today? Did I increase my free cash flow or not? Most companies don't. Okay. It's a good thing because so far you have lived without knowing it. Now, if you know it and start measuring it, the longevity, the chances of your living long will go up and not go down. Now, we have created many, many small operational measurements like efficiencies, like freight costs. We have done too many of their parameters. In most companies, the MIS measures what I have seen at least 10 pages of MIS. And each page has at least, if nothing else, at least 20 odd parameters, which means we measure more than 200 measurements, 200 measurements. And yet, most of us, I can say very clearly, they don't measure free cash flow. So you see, if you can just start measuring anything, results starts happening. In fact, whenever you measure anything and start taking action on them, it is likely to improve. Any dispute or disagreement here, please give me a response.
Everyone agrees.
Okay. Now we want to give tips to everyone. What shall they do, every employee in the company, so that when he takes those steps, he is reasonably or she is reasonably sure that if we do this, our good financial parameters, profit, ROI, free cash flow goes up. I'm going to share with that. All you need to do is, frankly, it will be the easiest. It will be the very easy for non-finance people. The problem may happen with my friends from the financial fraternity. They will have to unlearn some of the things, not learn anything new. It is unlearning. But people who are not exposed to finance, they will learn in no time. I promise you, before 7 o'clock, you will have this. Let's look at it a little bit. How's our performance? Let's first check, are we making money? Whatever way you decide, I'll take your word. And next question is, are we making more and more money period after period? Please give some response. What is the response, beta?
We've not got too many.
Okay.
Yes, some have said yes, they are making. So Mr. Nandwani, I understand you are saying that your company is making more and more money period after period. A lot of people have said no. Some have said yes. Somebody has said yes, except since the lockdown.
No problem.
Not making consistently.
Okay, fair enough. Now let's look at it. To my mind, this is the single largest parameter which is important for you. Job not done plus reasonable reason is equal to job not done. Don't give me the reasons of lockdown. Don't give me the reasons of recession. Don't give me any reason. If you didn't do it, the fact of the matter is job has not been done. Now, the correct thing would be, if my current way is not working, can I find an alternative? What action shall I take? By blaming the environment, you are not going to make more money. In fact, you're losing time. My favorite example is when Peter was asked by his father, son, what has been your result? His response had been, Paul has also failed. Just because the whole industry is not doing well, it does not mean that you should do not well. Is this clear to everyone? How to do that is not easy, but to start with, don't give justifications. Shall we move on? Now I'm going to explain to you a very simple way how finance, how money is made. A very simple model. Money comes from our vendors, customers. Let's say we got $100 in a month. We are a money-making machinery, the gray color system. Where does the majority of the money go? It goes to our vendors, what I call pure variable cost. I'll explain these terms a little carefully, but right now you assume all your vendors whom you are paying. So out of 100 which has come in, 60 has gone out. How much is left over in that particular month? Any response? I'm sure you
40,
can start.
40, yeah.
I'm sure this is very simple mathematics, that if you subtract 60 from 100, it comes 40. Now, there are two other things. One of them is what we call operating expense. I call it leakage. It happens continuously, whether you make it or you don't produce it, whether you sell it or you don't sell it. Right now, if you see, quite a few organizations have not worked for the last 30 days. Yet, their employee cost, their rents, some other fixed expenses will be there, whether you're producing or selling or not. Do you agree?
Yes.
So look, from profit and loss angle, we got $100. We sold something for $100. We recorded a sale of 100. We purchased material worth 60 for selling it for these $100 sales. So we are left with 40. The fixed expenses for the month, we have 30. So it is no brainer that our profit is 10. Do you all agree? Any dispute? But the single largest question, which is the most important, how much money did I deposit in the bank? I cannot determine based on these three parameters. Because there's one very, very important parameter not shown here yet, is investment. Investment is all the money that is ours, but not available as cash. Now, what are the elements of this I? It could be plant and machinery. It is the land. It is the building. It is the money our customers owe us, but have yet not paid. It is the inventories we have kept in our plant for serving our customers. Of course, if we have a credit from our suppliers, that will be subtracted from it. But let's say for the time being, I at this moment for the beginning of the month was 300. I'm repeating everything. We had a sale of 100. pure variable cost of 60, fixed expenses, operating expense of 30, profit 10. And the beginning of the month, this number was, I was 300. I was 300. But by the end of the month, it became 307. Why? Because inventory gone up by 7 units. So how much money do you think we'll deposit in the bank? Any answer?
3. A lot of people are saying 3. Somebody has said loss.
Okay. See this, I didn't ask for loss at all.
Somebody has said 13.
Okay. So look, 100 came into the company. Out of the 100, 7 got stuck in the, can you see this tank? Because inventory went up. So already from 100, it became 93. From 93, 60 I paid to the vendors and 30 to the fixed expenses. So I'm left only with 3 units in the bank. Is this clear to everyone? If someone is not clear, I will hold on.
Yes, everyone is responding. Yes. All responses are clear now.
Now we all know the only thing what matters is
a couple
cash.
of people have requested for this to be explained again.
Okay. You see, we had 100, which we sold something worth 100. 60 went out as my material cost. So my so-called contribution, I'm using the word carefully because I'm going to change it in a few seconds. My contribution 100 minus pure variable cost is 40. Fixed expenses, operating expenses were 30. So my profit was 10. Now, if this profit would have gone the entire money to the bank, if I had not invested any money in buying a new machinery, increasing my inventories, or increasing my receivables from my customer. Unfortunately, the 300 became 307. After all, this 7 had to come somewhere. I had not borrowed money from anywhere. This came out of the profit I generated, and 3 was only deposited in the bank. Is this clear to everyone? If anyone has a doubt, please tell me. Ira, any response?
Yes, most of the responses are yes. People are asking, is this 7 only in inventory or payments?
Okay, I'll have to help them understand in a more little. Okay, you are getting a salary of 100. Assume, unfortunately, your income tax has gone up by it is now 60%. So out of 100, 60 the government has taken away. How much is left in your hand? How much is left
40.
in your hand?
Yeah, 40 responses are coming.
Your rentals, your education fee for your children, your provisions, etc. cost you money. So how much money left in your hand?
10.
Now you felt like I must buy a new bag for me. And you went out and purchased a new bag for 7 units. How much money have you got in your hand?
3, yeah. A lot of responses are coming. 3.
Now this bag will last you for long. It's an investment for you to, when you travel, it looks very nice. You have purchased a very expensive bag of 7 units. It will go for long. It's not the expense. At best, you will call it, take it depreciation. But the fact of the matter remains, you have consumed 7 units, either in capital investment or in increasing your inventory. I can also change from the bag that these days there is a lot of fear whether there will be food will be a shortage or not. So you purchase some extra material to be used in due course of time for additional 7 units, which you have not consumed in this month. So how much money left in your hand? Only 3 units. That is all what you will deposit in the bank. Is this clear to everyone?
Yes, I think a lot of people are saying it's clear. You can move on.
Okay. Now, if you do not remember anything from today's program, Just remember this slide. This slide is good enough to make you good enough, let me say finance person. I'm not using the word accountant, finance person. Now I'm sharing 3 new parameters called throughput, investment, operating expense. Throughput is nothing but rate of contribution. You should remember 100 minus 60, 40. Now this is 40 is my contribution over 1 month. So throughput for the month is 40. Is this clear? Now, what do we cover PVC? All costs that would be saved if we sell or produce 1 unit less. Raw materials, consumables, freights, commissions, etc., etc. So throughput is equal to net sales minus PVC over a period of time. I'm again using this word, over a period of time. This is of extreme importance. It's not contribution in the conventional sense. Let's say you are a cell phone manufacturing company. You sold a cell phone for $10,000. 7,000 was your variable cost. Your contribution for that was 3,000. I do not know whether the throughput for the day or for the month was 3,000. You have to multiply this by the number of units you have sold. Is this clear to everyone? Ira?
Yeah, we're getting responses. Yes, yes.
Okay. Now comes to I. All the money tied up in the organization, it is all raw material, WIP, finished goods, money blocked in plant and machinery, receivables are also part of I. Any money which belongs to us but not available in hand is a part of I. For example, as a personal level, if you were to get income tax refund, your company has deducted more tax than was required. This money is yours. You will get it. God only knows when. But right now you can't go and buy vegetables with this. Right now you can't go and buy medicines with this. This is your money, but not available in your hand to spend money. Is this clear? Or buy the stuff. Any question on I?
Yeah, if there are any questions, please type the question. No, everyone is very clear, no questions.
Now, what is the operating expense? Operating expense, I'll give you the simplest expense. What is not pure variable expense? That is operating expense. After all, we buy the raw material, we employ people, we build the factories, we do all what? To convert this inventory into selling to customers. Now, operating expenses are all those expenses which even without producing anything, without selling anything, you still have to expend those money. That's operating expense. Very simply, what is not pure variable cost is a part of OE. Is this clear to everyone?
There are 2 questions. A few people have asked if you can explain throughput again. And somebody has also asked if payables should be deducted from investment.
Absolutely. Payables, the vendor credit is negative I. Absolutely right. All the credit which you get from your suppliers has to be subtracted. No dispute of whatsoever. Now comes throughput. Once again, I'm saying, I will take the same example of the cell phone. You are a cell phone manufacturing company. You sell your all cell phones at a fixed price of 10,000 rupees. And somebody gives you all the material required for that for 7,000 rupees. So your contribution per cell phone comes to 3,000 rupees. Now, 3,000 rupees, let us say you sell 10 cell phones a day. 3,000 into 10 is how much? It is 30,000. So your throughput for the day is 30,000 rupees. Is this clear to everyone?
Yes, we are getting the response, 30,000. I'm also going to share a couple of questions on OE that have come. One question is operating.
Stop. First, let's clear. Throughput is clear. I want to get out of the throughput.
Yes, everyone is saying yes.
Okay. Now please read the question for no operating expense.
Is operating expense same as fixed expenses?
Yes and no. I'll tell you the reason. There is an irony what we call fixed expenses, they keep on increasing year after year. Do you agree?
Yes, I can see the responses. Yes, yes.
So yes, basically I call it operating expenses. Fixed expenses are not those which remain constant for its entire life. All it says, by increasing or reducing sale or production, this is not getting impacted directly. Almost it will not get directly. I'll give you a small example from your home. Is the money what we spend at home on buying the food, etc., is it operating expense or variable?
Yeah, please type the responses. OE, OE. Somebody has said variable. Mostly people are saying OE. A few have said PVC.
Okay, so let me ask you. See, this is where it comes. Let's say you're traveling for 2-3 days. So obviously you're not eating at home. Do you think in that month your fixed expenses have come down?
No, no.
Okay.
No.
Now I'll bring two parameters here. Why do we measure anything in life? Not one, why do we measure anything in life? I will tell you, the only purpose of measuring anything is to help you take better decisions for increasing your goal units. Do you agree? The only purpose of measuring anything is
Yes.
to help you take decisions for increasing your goal units. Is it clear to everyone?
Yeah, we are getting a lot of responses. Yes.
And second thing, I speak what I learned from Dr. Goldratt. Be approximately right than precisely wrong. In most cases, we don't need very specific third decimal place parameter to make decisions. We don't need it. But we waste a lot of time in discussing these. Is it operating expense? Is this variable expense? Now, I'll give you a very simple method. If you get stuck, is it variable or fixed? I'll give you the easiest way to handle it. Toss a coin. Choose whatever you like. In most cases, it will be such minuscule, it will have no impact on your decisions you're making. So don't waste your energies, time in trying, is it a part of operating expense or a variable expense? If there's too much of a debate, just toss a coin. That's good enough. Now, does it explain why I don't use the word fixed expenses in OE? I call it operating expense. It may fluctuate. I'm not too much worried about it. By and large, it will remain constant. Clear?
Yes, we're getting responses.
Okay, I'm moving on. Here is the simplest equation. It does not require mathematics beyond class 5. Yes, I'm using the word beyond class 5. Profit is equal to T minus OE. Any confusion on this?
Yes, people are responding. Yes, it's clear.
ROI is profit upon investment.
Yes.
Okay. Now I come down to the most difficult equation of the entire day. No, second most difficult. Free cash flow. It's P profit less increase in investment. Remember that 7 units? Increase in inventories or buying a machinery or buying a very fancy bag. This is nothing but that. So free cash flow is profit less increase in I. Of course, vice versa is also true. If instead of increasing I, we reduce inventory by a few units, FCF will be more than profit. Is this clear?
Yes, we're getting responses. It's clear.
Okay. Now, I'll come straight. Most of you are saying we have a problem of cash.
There is one request to repeat it, profit minus delta I.
Okay. You see, if inventory or investment would not have gone up, it would have remained constant, then whatever the money I had so-called profit, I would have deposited the same thing in the bank. My money in the bank would have gone up by the same amount. Do you agree?
Yes.
However, if there is a change in my inventory or investment level, then it will go up or down accordingly. If I have invested 7 more units of money out of the profit of 10 in increasing inventories, buying a new capital equipment, or giving additional credit to my customer, then the money what I'll deposit in the bank will be reduced by that amount. Is this clear to everyone?
Yes, clear now.
Okay. Now I'm saying each one of us are saying the response is that we have a huge problem on managing cash. In fact, our entire topic of the day is how do we manage cash. But before I explain you the methodology, first you must understand what is cash. Now I'll explain you even more simply how to measure free cash flow for any company without any accountant in the world. Without any accountant in the world, you don't need any accountant to measure your free cash flow. None, zero. Every morning you look what is the money lying in your bank account. If it has gone up from yesterday, your free cash flow of yesterday has gone up. If it has come down from yesterday, it has come down. Is this clear to everyone? It's money in the bank. Free cash flow is the increase or decrease in the money in the bank. That's all. Clear
Yes.
to everyone?
Yeah.
Now everyone can understand. I don't need any profit and loss. I don't need any detailed calculation. Just check the money available which you can spend looking at your what you call report from the bank. And now most of us have these mobile bank apps. You can actually check how much cash is lying in the bank, which you can spend. Now, how do we increase cash? But before I talk about it, I have a few, let me say, hard questions. Dineshji, you are there. I'm assuming you're still there.
Yes, he's here. He's just commented.
Now, Vartman is there for 55 years. Now, it could, let's say 10, 15, 20 years back, even 5 years back, if it was not making money, it would not have been there today. Am I right? It must have made money in the past. Must have done something right. That's why it is standing. Am I right, Dineshji?
Yes, he has responded. Yes.
Now the question comes, please, why we are having so much concern? Oh, we are not getting any money from our customer. I agree. No customer has given you the money. What is the problem? If you have been working for the last 55 years, I'm now taking the example of home. For 1 month, your salary has not come. Why should you have a problem? Where all your saving has gone? Where all? What's the problem? You have cash available. I'm not talking of profit. I'm first looking at why should we get concerned about it. I'm not saying don't take action. And what I have talked about Vartman, I'm also talking to every company which is there in existence for the last 5-10 years. If you have been there in the last 5-10 years, what all the money you made in these years, where has it gone?
There is one response here that money earned is spent in expansions.
Now, I'll come to that. This is the most stupid thing most people in the world do it. You have assumed that life will continue to be ever like that. But you don't behave that same way at home. You don't assume that your salaries will keep on coming forever. You do save some money at home or not. If yes, why not in the company? Because who has promised you that no emergency will ever come? Is it the first time the emergency has come? In 2008, we had the same problem. And some people who may remember 92, 93 or 91, when we had to, mortgage our gold because we had no foreign exchange. Things, nobody has promised you smooth ride. So that is the one thing. We are investing far too much money in our own business in order to generate more money. You have to keep something for emergency also. So in any case, if you're not kept it, for anyone who I'm talking about, please start keeping in that you cannot afford not to have a word, I'm using the word cash buffer, protective cash buffer. Please write down, I've not written here. You need to have a protective cash buffer. How much? That will depend upon your industry, your situation. Very simple example. When we go out, let's say I'm traveling from Delhi to Bombay, I do keep some cash in my pocket because somewhere credit card may not work well. Even though I'm not supposed to spend any money, yet I keep. Why? It's my protective cash. Should an unforeseen requirement may happen, I don't want to fall short of money at that time. Similarly, now I can tell you a couple of things. Infosys, at one time, it was keeping 1 year of fixed expenses, operating expenses as cash buffer. 1 year, which means if they did not get even 1 rupee, $1 from their customers, they will still have no problem in managing the cash for their employees or all the fixed expenses. Just another example, I read today morning, Warren Buffett's company, Berkshire Hathaway, it has kept right now in cash $128 billion. $128 billion in almost in the bank account, earning zero interest. Because at this moment, the question is not return on investment, it's a question of return of investment. And many of us, I can also give you, don't rush into the stock market buying because it has fallen by 30-40%. Everyone will be telling you, please conserve your cash, situation is not clear. Now, my recommendation, personal recommendation for anyone, how much cash they should keep at home. I'm a very conservative person. 2 years of cash outflow I'm talking. It includes your EMIs. This cash should be available to you at any given time. 2 years. God forbid, something happens, the business is not generating money. If I'm an employee, I've been laid off, I'm not able to get the right job in due course in time. If I have no cash available, then I'll pick up whatever first available opportunity comes, good, bad, ugly. If you don't have this pressure that how will I make my next month's to and meet, then you will be able to do better decisions. Is this clear to everyone?
Yes, everyone is saying yes. They're also asking for the organization, what kind of a cash buffer should they have?
Okay. In the absence of anything else, I would say keep it 3 months.
3 months?
Yeah. 3 months of cash buffer, which means all employee expenses, all electricity bills, etc., which are going to be there irrespective whether you produce or not. Let's say you are under lockdown and you're not allowed to produce anything. Whatever money you still have to spend, keep 3 months. Of course, here I will not worry about depreciation because I'm not paying something called depreciation. But in case instead of depreciation, if I have to repay a loan installment, that's a part. That's what I'm using, cash buffer of 3 months. Now, some company might keep it more, some okay, keep it less. But I would say, in my assessment, I don't have a magic formula. It depends from company to company, people to people. I would say 3 months is a good enough parameter.
There is one question. Is cash buffer and cash reserve the same?
No, I don't know what is cash reserve. So that's why I'm a little careful. Cash reserve is how are they keeping? Let me say cash buffer is this money I can withdraw at a moment's notice. It's not to be kept in the mutual fund. because nowadays you will not be able to sell your mutual fund for two reasons. One, the fund might have stopped paying anything, like Franklin Franklin Templeton.
Yeah,
Yes.
Franklin Templeton.
They said for next few months, we don't know. We are not giving you anything. Or if it is there in a normal mutual fund where the price has come down quite significantly, you will not like to encash your this thing, come out in a very big loss. So my request would be, cash buffer is available very easily. If it's a FD and you can withdraw prematurely, I will call that cash buffer. Is this clear?
Yes, actually a couple of people had asked if FD is okay.
Yes.
Now, one more question. Are interest expenses to be included in cash buffer?
Yes. Interest expenses are part of OE. Hence, it has to be kept here. All cash outflow. I'm using the word, don't get into anything. Just check what the last month's checks you cut. Whatever you did not cut for your vendors, practically where else you're giving the money? For operating expense. That's it.
Okay. One more question. Is my CC limit unutilized amount my cash buffer?
Yes and no. Because as your sales does not happen, your assumption is that the bank will not reduce your cash CC limit. But there's every possibility the bank may reduce your CC limit. Let me give you a concrete example. Last year, it was a monumental year for a company called General Electric. How many people know the name General Electric? A lot of people?
Yes, yes, everyone's saying yes.
It was sent out from the original Dow Jones index last year. Why? Because it was not able to make payments to its vendors on time. Its rating, etc., had gone down. And why the rating, etc., had gone down? Why was it not able to pay the vendors? Because the banks who had given the money as loan to the GE, they refused to give it again. Roll over, that's the right word. They said no more, now we are not rolling over. So the assumption that whatever CC limits I have, they will remain the same is a question mark. It also depends your relationship with the bank, how well you have done in the past, whether you have fudged your inventories and receivables or not, whether you have been making prudent use of it or not, it will all depend. But ideally speaking, I should not be using any CC limit. Now, yes, you're going to say that, what do you mean? Frankly, I should never be borrowing. But now that you have borrowed it, let's see what can we do about it. Ideally speaking, I don't want to have any financial burden on me. I learned one simple thing from my father. Borrowing is like a steroid. Many times, or sometimes you need it to save your life. But if possible, don't take it. My advice is very, very opposite of normal people. And there's something called cost of money, cost of capital. Oh, share capital is very expensive. I'm not getting into too much of that. It is the most stupid thing. Look at Warren Buffett. Does it use CC limit? Does it borrow money from the bank? It has $128 billion literally available, earning no interest. And yet it is, in the last 60 odd years, is CAGR, compounded annual growth rate, is about 20% plus. 20% plus for more than 60 odd years. How many companies can talk about it? So request, cash buffer ideally should be without the CC. May I move further?
Yes, we are actually getting a lot of questions because we are almost at 6 p.m. If we can move to the free cash flow.
Okay. Now, free cash flow, please, why I'm bringing the slide back, it has two components. One is profit, another is investment. Now, it is not one component. Most companies think that in order to increase cash flow, we have to increase sales and profit. Totally, utterly wrong. Totally, utterly wrong. In fact, in most cases, when you increase sales, your profit will go up, but so will be your working capital. And the net result is, as you increase your sales and profit, your actually free cash flow comes down. This is what happened to most companies. They generated good money, they invested back into the business. The sales went up, the profit went up, but the cash they don't have. Please appreciate, you must keep certain amount of cash always in reserve to be used in emergency. Unfortunately, we forgot about this principle. Now, I'm coming to how do we reduce working capital specifically. Now, there are three forms of inventory, I'm saying, RM, WIP, and FG. Now, there's a huge scope to reduce RM, huge scope to reduce WIP, FG. Now, I can only tell you, I can actually take the case of one company, Jindal Steel and Power, my favorite company. 5 years back when we started, our sale monthly was 1,000 crores. And our inventory plus receivables was 6,500 crores. Today, our sale is about 2,500 crores per month. And our inventories plus receivable are about 3,000 crores. Maybe 2.5 only. So where earlier my inventory receivable ratio to my sale was 6.5, today it is 1 or 1.2. There's a huge scope to reduce all three of them, including receivables. In fact, today JSPL has negative receivables. What do I mean by negative receivables? Everyone who says my customers don't buy from me, listen, you have a problem. Customer don't have a problem. You don't know how to ask them the right questions. That's all. You don't know how to sell it properly. Negative receivable means from all our customers, whatever advances we have, they are more than the money my customers need to pay back. It is possible to do. It will not happen overnight, but it can be done. And for those people, I'm giving a name of the book. Ira, you can send it later on by email. Pitch Anything by Oren Klaff. Everyone should read this book. Is this clear? Ira, you are on mute.
Okay. There is one question. Can you just explain negative receivables again?
Yeah. See, there are three different ways we can sell. One, you pay me advance before I sell it to you. You pay me advance today, after 15 days, I'll give it to you. Like today, when you want to buy a car, any car, first he asks you to you have to give him the money, the dealer. Maybe in a day or 2 or 3 or 15 days, he'll deliver you the car. This is called advance. Another case is, which happens most of the time when we go and buy regular stuff. You go to a kirana shop, you buy surf or whatever it is, you take the packet of surf and give him 100 rupees. This is cash sales. No credit on either side, no advance. And the third situation is, you buy some material and you promise him to pay after a month or 15 days or a week. Now, advance means whatever money I have got before I have delivered the material to my customer. That is advance. And receivable is, I've already sold the material, but the customer has said, I will give you the money after 15, 30, 60 or 90 or 120 days. That is called receivable. Now that receivable minus advance, if it is negative, it is called negative receivables. Is this clear? Is this clear?
Yes.
Okay. May I move further? Because these are the important questions. I want to give you, not get stuck only here. But remember, RM, WIP, FG, and reduce receivable account payables are, why I'm using the account payables, because some companies use the word account payables rather than receivables. So please reduce it. Now, many times, I said that my customer doesn't have money. Nonsense. He has the money. but he has decided not to pay you today. Now, if I can induce him to pay, give him some cash discount. Don't too much worry about profit loss or any other financial ratio. At this moment, your need is to survive. If your workers go away today and because they did not get the salaries on time, so restarting can be very, very difficult, sometimes not possible at all. Even if you have to pay a little so-called money to them, it makes sense to give them the discount and collect it right now. And now I'll come to the most important parameter which I wanted to share, concept of cash velocity to improve free cash flow. Now, it is very, very simple. Unfortunately, it is not taught in any business or finance school. Never ever. At least I have not come across anybody using these words. But your local vegetable seller knows this very well. Now, what does it mean? Now I'm going to explain using our terminology in the past. You remember, we have to spend OE irrespective whether you sell, produce or not. Now let's say our PVC is 50%. Is this clear to everyone? What is PVC? As a percentage of net sale is 50%. Is this clear to everyone?
Yes, we're getting responses. Yes, clear.
Okay. Let's say I'm selling a mobile phone for 1,000 rupees, 10,000 rupees. My PVC is 5,000 rupees. Now, let us say I do not get any credit from my supplier. He says, you have to pay me before you lift the material. So I have paid for one mobile phone 5,000 rupees. Now I bring it. There'll be some time it is coming in the transition to my plant. Then it stays in RM inventory for a few days. Then it takes a few days to go into WIP. Finally, it is ready and it gets shipped after 2 or 3 days. And my customer says, I'll pay you immediately as soon as I get the material. Assume. Let's say the total time taken is 30 days. Now let's look at it. I'm talking of current situation. Your cash situation is not bad, but not very good. You have paid to all your vendors what was, you have paid to your employees whatever was required. But now you are short of cash and you can have only cash for one mobile phone. Only one mobile. You don't have any more money. So you spend 5,000 rupees today. When will you get 10,000 rupees? The total cash to cash cycle time is 1 month. How much time? How many days?
30 days.
30 days. Now, I am explaining through a simple method. This 5,000 rupees has become 10,000 rupees after 30 days. It is as good as keeping 5,000 rupees in a bank and generating 10,000 rupees at the end of the month. So what is the interest rate per month I have generated from this bank? If you deposit 5,000 today and after 30 days you get 10,000, how much is the rate of interest? Somebody? Any calculation?
1,200%.
Now, this is where the problem is.
We are getting is 1,200% per annum.
Who the hell asked you for per annum? Did I ask you per annum? I asked you what is the rate of interest I'm getting per month. So what is the rate of interest I'm getting per month?
100% per month.
100%. Now I'll explain the same thing. Let us say somehow I have enough money to take care of my operating expense. In the first month, I had only 5,000 rupees, but now at the end of the month, I have 10,000 rupees and I can use all these 10,000 rupees for buying raw material. Now from this 10,000 rupees, for how many mobile phones can I buy the raw material? Remember, each mobile phone raw material cost me 5,000 rupees.
2.
So I have purchased 10,000 rupees worth of raw material. After another 30 days, now it will get generated to, it will become 20,000. Is this clear?
Yes.
Is this?
Yes.
So now let me take you back. Now you go back to a bank, you're given him 5,000. And after 2 months, the same bank gives you 20,000. What is the rate of interest per month? Please explain.
$100% per month.
100% per month. It's 100% per month compounded. But if I have taken a normal case, 5,000 has become 20,000. So the interest is 15,000 over 2 months, which means the average is 7,500, which means by linear proportion, normal interest, simple interest, which will be 150%. I'm not talking of simple interest. I'm talking of compound interest. Is this clear to everyone?
Yes, a couple of participants have written 150%.
Okay, so 150 is not. Please understand now I'm talking about compounding monthly. In fact, this is the word I call cash velocity. And why does cash behaves in compounding? Hopefully, I'll be able to explain you by the end of the workshop or this one. I'm running a little behind schedule, so I like to move on how to generate more cash. So one important thing is, I can only share with you for most companies in the country, the cash velocity they have is above 10% per month. So if you have to receive, if you can get collection from your customers, even by paying 2, 3, 4% discount per month, please do so. You will make more money in the process. Get collection today, early morning, as early as possible. Don't make any effort to sell anything. Just collect money. That is more important, because today you will sell again. First, you have to pay money in cash because your vendors are not going to give you any more credit. You have to pay cash from your pocket, depleting your cash flow, and your customers, if you are not going to take the money upfront, you are in more trouble. Is this clear to everyone?
Yes, we are getting responses. Yes, you can move on.
Okay. Now, important is you can calculate cash velocity for your company. I'll give you the formula. It is very simple. It will at the end of the presentation is there. Cash velocity. All you need to do is calculate 3RM. What is your, let's say, sales per month divided by your pure variable cost, and then one more parameter is what is your cash to cash cycle time. If you have these 3 methods, then we can give you the formula. You can calculate cash velocity. If the discount what you're giving is much less than your cash velocity, go ahead and collect the money. Go ahead and collect the money. Reducing inventory and reducing consumption go hand in hand. This I must explain you in a very simple manner. Often I have experienced in many companies, when they withdraw material from the store, they withdraw in large quantity for 1 week, sometime for 15 days. Now think about it. I'll give you the simplest explanation. You are trying to butter your toast, and there are 3 packets of butter are lying in front of you. 500 gram, 100 gram, and 20 gram. In which packet, if that was the only packet left over, you would have taken the more butter or the maximum butter for just applying on one toast? 501, 101, or 20 gram?
500 grams.
Perfect. And now let's go the other way around. If I had only 20 gram packet allowed, would I have consumed as much as 500 gram or 100 gram, or much less for one toast?
Less.
Yes. The same thing happens in our companies. When you withdraw more material from the stores, it creates 2 problems. It immediately indicates there's a shortage of raw material in the store. And at the same time, there's an excess material on the shop floor. it gets wasted, it gets consumed extra, it unnecessarily create panic when there was no reason whatsoever. Not only that, your PVC will also go up. So one very simple thing, withdraw more frequently from the store rather than one big. Are you clear about it?
Yes, yes, everyone is responding, yes.
Okay, now something more. Reduce operating expense. No capital investment. If it is a very small amount, I'm not talking about it, but otherwise no capital investment. Convert fixed cost to variable wherever feasible. Now, I'm going to share not too much on this. Many of your highly paid executives, see if do you need them for all 6 days. If not, ask them to go down and become a consultant to you and change their salaries to retainers. But let's say 75%, 60%, 70%, and let them work 3 days for some other company also. See what you can do, your fixed cost to variable costs. As much as possible, protect your vendors and employees. Why vendors and why employees? Frankly, in my opinion, worldwide, there'll be only 2 constraints in due course of time. Either companies will not have cash, or even when they have cash, they will not have raw material, because the time to get raw material has increased because supply chain has broken. The synchronization has broken very much. Now, most of your vendors may be small vendors. The fact of the matter is, if you don't get even one small part, one small item, you cannot produce it. For example, if you don't have salt at home, even though it's a very small value item, you cannot have a good food, good tasty food at your home. So please do protect your small vendors specifically, and importantly, employees. And for employees, don't cut salaries of your workers. In one company where I've been working, I said, pay everyone up to 30,000 or their salary, whichever is less. Because today in lockdown situation, most people do not need more than 30,000 rupees to survive for the month. Now, 30,000 could be for one way. Somewhere else, it could be 50,000. But the important parameter is, I'm not saying you're reducing your salaries. Cash is important. Forget about anything else. Cash in the bank, which is what is important. Next parameter is, don't try to save money.
There is one question from Mahesh Sharma ji. His question is, would you approve of salary cut across the board, if not laying off, in view of no revenue in the last 1.5 months?
Yes, but this is very, for example, below a certain level, I will not cut down anything, because they're hardly able to run their life reasonably okay. At the lowest level, for your helpers, for your casuals, please don't do it. By all means, cut 50% at the top level, no problem whatsoever. They can still survive. Cut 20% for mid-level. Gradually, you can do that. But specifically for the lower level, please don't do that. You will have more harm coming from that rather than good at the end of the day. Because if when you are laying off, etc., the compensation itself could create more hole in your free cash flow. So what I was trying to put in, don't cut down on these stupid things: tea, coffee, canteen food, local travel. This is not it. They are not going to give you much saving. Don't cut costs on safety, hygiene, maintenance, spares, quality. This is necessary. They will help you. And ensure that savings realized from reduction in outstation travel are kept in reserves, because tomorrow you may need it. Right? But just don't spend it. Just because, for example, at this moment at home, we are not eating a lot of junk food. So don't waste it in buying something unnecessary, right? There's a lot of saving happening in almost every company. I mean, for all of us, we are not traveling, so petrol cost has saved. We are not eating out, all costs have saved. All these keep as a reserve, you will need it. Now, more detailed discussion will have to be looked in. to each of the, for individual organization, but as a principle, I would say, if necessary, reduce salaries, but don't lay off. Don't lay off. You will need them little later. I'm moving ahead. Now I'm coming to the concept, what we call constraint for making money. Every company in the world, constraint, there'll be something which will prevent from making it more money. It could be supply, it could be operations, it could be market. In fact, I would modify that market as orders. In fact, I will make it 4 constraints. Either you don't have enough orders, or you don't have enough capacity. Why I'm talking about capacity? Capacity is not your capacity of your machines or plant. If you don't have the right people, where is the capacity? And this will have a major impact in India, because the workers would have left for their villages, and it will take not a small time to bring them back, or the skilled people may not be available. So operations could become a bottleneck. And there's something more. Even if you have material or money available, you have paid to your vendor. Vendor has also kept the material ready. Because of disruption in the logistics, supply chain, you may not still get the material. So supply can also become your constraint. And of course, we have been talking about, if you don't have cash, then cash is your constraint. Now, I'm sharing 5 focusing steps, what we call process of ongoing improvement. Are you able to see it pretty clearly?
Yes, we can see it clearly. The first one, right now we can see the first step 0.
Yeah, that's all I was talking. Now, first step is decide on the goal and its measurement. Is this clear to everyone? I'm assuming you have.
Yes, you can move on. We're getting responses.
Okay. Step 2 or step 1 really is identify the constraint. Where is the constraint? Constraint is not any obstacle. I can promise almost every company that in the days to come, they'll have a reduction in their order, they'll have a reduction in their capacity, they'll have a reduction in their supplies, and they'll have a reduction in the cash. So are there 4 constraints? No. The smallest out of them is the constraint. Smallest out of them. Any question on this?
Can you give an example? People have asked if you can explain.
Okay. Let us say I've got a lot of material right now. A lot of money right now. But my vendor, he's a particular vendor. I can take the actual example. I have a client called Thomson Press. Unfortunately, 3 days back, there had a fire in their godown. They were keeping paper. Fortunately, no one had any injuries. Now, a lot of paper has been burnt. Now, they have money, fortunately. But for them to get the fresh material, it will take 4 months. It comes from Sweden. Now, getting them as it is, their lead time was almost 2.5 months. Another 1.5 months is their specific, the way it has to come from there. So please appreciate that even though they may have all the orders, they may have all the capacity, right now their constraint has shifted to supplies. Is this clear to everyone? Okay.
Yes, people are saying yes.
Now I'll move on a little bit. Let us say right now you don't have this problem. You have a reasonable amount of cash. You are paying your vendors on time. You are paying your employees also on time. But the cash coming in has been somewhat smaller. So after a few months, a few days, few weeks, hopefully not, you may find that you have a choice either to pay money to your employees or to your vendors. Now, you still do not want your employees to be laid off. Even after cutting their salaries, we still have a shortage of cash. So the constraint may have shifted from supplies to cash. Is this clear?
Yes, yes.
Okay. Fortunately, we are able to make sure that we have enough lines of credit from the banks. The banks have supported us. The vendors have supported us. It is possible that you have enough orders also. Unfortunately, some machine has gone under breakdown, or the relevant people working on the machine are not available. Now the constraint could have shifted to capacity. Is this clear? I'm unable to produce. I have the raw material, I have the cash, I have the orders, I have the machines also, but manpower for the particular equipment is just not available. Then I can have a constraint of operation, then within the operation, a particular skill level of the manpower. Is this clear?
Yes.
Now, step 3, or step 2, if I can call it, it is not to add more manpower or add more machinery or get more order. First, make sure wherever your constraint is, are you using it adequately? For example, if cash is your constraint, please listen carefully, which many of you may have. If cash is your constraint, please don't buy too much material at this stage, because today you may buy a item because it's more cheaper to buy in large quantity, but it's like buy oil or the butter in a large way, but falling short, no money to buy the salt. It can happen to you. Please don't buy more material than minimum required. Even if it is more expensive, that's where the concept of cash velocity which will come in. Because when you buy today more material than what you need, your cash to cash cycle will go longer. Are you clear about it?
Yes, we can move on.
Then step 3 is subordinate all policies, decisions, and procedures to exploiting the constraint. What does that mean? Many times in the past, we were given small key result areas. For example, the dispatch man or purchase man, they try all the time to reduce freight cost. But unfortunately, while reducing freight cost, they delay buying the material because I want to get in a large quantity, or they delay dispatching. Oh, let me send a full truck because then I save freight cost. But in the process, your cash to cash cycle time will go back. So we have to see that everyone understands right now. What we have to do is not look at local optima, but make sure how do we improve whatever we need to do to improve cash if cash is your constraint. Similarly, for other things, if orders is your constraint, that is possible, then make sure you are not taking large batches and delaying whatever orders you have. Many times this happens that I got order for 2 different products, A and B, from 2 different customers. Now I got A quantity of 100, B quantity of 100. But in the past, I was keeping a batch size of A before I started. So what happens when you produce batch size of A of 1000, 100 will go to the customer, 900 will come in your inventories. So what have you done? You have consumed your raw material and you have delayed your deliveries of B order. So as it is, you have a shortage of orders. When you delay your orders, it will be the most stupid thing to do. Is this clear? And please, at this moment, when constraint is unlikely to be your operations, don't too much worry about efficiencies of your machine. These have no consequences. What was right at one time may not be right today. That will depend upon your constraint. However, if you are in a very good situation when one particular machine or operation is your bottleneck, then utilizing that machine, efficiency of that machine is the most important thing to do, because that's your constraint. It will depend where is your constraint. Without identifying the constraint, if you try to take decisions, most likely they'll be wrong. Most likely. See, it's like this. Unless we identify what is the root cause of our disease, trying to give a medicine can not only be useless, it can be harmful. So please, 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 I request everyone, first identify the constraint. Step 4. Now is the time. Okay, if I have to elevate, I have subordinated, I have exploited, but I still need more. Please go and take more. Let me take the example of cash. In my opinion, most companies do not need more money. They already have, except they did not know how to use it. It was lying in the form of inventories, WIP, RM, FG. It was also lying in the form of receivables with the customers. There are many, many, many things, and we were not doing it. Sometimes we had a dispute with the customer, legal cases for last 3-4 years. We are awaiting the resolution of that. If your cash velocity is more than 10% per month, just take my word for at the moment. Do you understand that even if you get your 100% of the money after 3-4 years, you have wasted your time, you have wasted your money. If you get the same 10% instead of 100, you got just 10 today. In 1 year, you have gone more because you are generating at 10% per month. You will make more money in that process. So all I'm trying to put it here is, first, you have enough money to take care. Nevertheless, if you need to do that, by all means elevate, but make sure you have exploited subordinated. Don't borrow too early. Don't increase your inventories too early. For example, many times you might have a dealer who can give you very fast delivery, but he's expensive. In fact, before you order to your main customer, main supplier who might be you may be importing, it makes sense to buy in small quantities from your nearest dealer because your cash to cash cycle time will come down. By all means elevate, but only after you have done step 2 and 3. And lastly is what we call avoid inertia, because it's possible when you elevated your constraint. Let's say cash was my constraint. I added my cash. Now cash is no longer the constraint. My constraint has shifted to either orders or supplies or capacity. So I will have to change all my policies based on the current constraint. Now it does create a problem. If my constraints keeps on shifting very frequently, then my policies and measurements have to be shifted. So the message is, you will identify your current constraint and you will choose where you want your constraint to be. Please, I'm repeating it. You will have to choose where the constraint should be. You will choose, you will decide. Today, I'm not going to discuss more on that, but just remember, there will always be one constraint, no matter what. It's better that you choose the constraint or it's a fait accompli. It's better you decide where I want to keep the constraint and then make all your policies, etc., and shift the constraint from your current constraint to your desired constraint and then lock it there all the time. Here are some suggestions. If the constraint is cash, take decision based on cash to cash cycle time. Basically based on cash velocity, which I'll cover in a few minutes. Reduce WIP and collect receivables even if at a deep discount. Explore working capital finance from SMEs, bank, government schemes. There are many things, even if they are expensive, don't too much worry whether they are getting a 12% discount, interest rate or 15, it doesn't matter. Your cash velocity is at least 10% per week, per month. In some cases, it can be as much as 10% per week. So don't waste your time. At this moment, you need the medicine fast. Don't too much negotiate the price of the medicine. Supply. Another problem many times, is there anyone who uses, who have a lot of assembly operations in their factory? Assembly operations. Anyone please raise, share that. Ira?
Yes, Parth is saying they have. Mr. Rajesh Nandwani from Panasonic, he's also saying they have.
Okay. Now, I'm assuming, I think, is there an automotive component manufacturer here or any automotive?
There's somebody from a fabrication job shop. Parth is saying yes.
Okay. Now,
Dheeraj is also there.
Okay. Let me take an extreme example, motorcycle. About 5,000 parts goes in a motorcycle, 5,000 parts. But if one right part is not there, can we make a motorcycle?
No.
No. So what happens, many times we buy in bulk more material of one item, one SKU, thereby starving many other parts. And if one part is not there, you are in trouble. Anybody from machine tool manufacturing?
Yeah, we have some participants from Bharat Fritz Werner.
Bharat Fritz Werner, because I used to go a long time back, 40, 50 years back to inspect the machines. I do know it will have at least 1,000 odd parts for a particular machine. Is that correct? Please check with the Bharat Fritz Werner person.
Yes, they're saying yes.
And do they have a shortage? Yes or no?
Yeah, please. Yes.
Yes.
Emphatic yes.
Is it every day or once in a while?
Frequently.
Very frequently. Now, very simple stuff for them is order by order, please procure the material full kit. Because unless you have full kit, you can't even produce one machine. But many times we get the material for 10 of those machines, but we don't have even a full kit for one. This is very commonly done, but common sense is not necessarily common. It's there in almost every company, if I can call it. Then we have to set priorities that unless I finish this, I will not start. I'm not saying you have only one machine, but please don't have 40, 50 machines. In one case, I said no more than 3 to 5 machines to be working on the shop floor at any given time. You're not allowed, even if you have full kit. 2 questions or 2 requirements. One, without full kit, you can't start. You cannot start if you have 99.99%. Second, you cannot start more than certain number of machines on the shop floor. Cannot have, even if you have full kit. Because I'm using all the manpower, all the facilities for producing one and sending it fast, thereby reducing cash to cash cycle time. Another simple thing, customers also give you a large batch. I'm requesting one, please ask them, can I give you in smaller batches? Because you can cut your cash to cash cycle time. If you're having a large batch of 1,000 parts, auto components, instead of 1,000, if I give them in 200, 200, 200, there are 2 advantages. I don't have to buy material for all 1,000 parts. My cash to cash cycle time can go down. My receivables will go down. And I'm also able to service my other customers who will have to suffer if I'm taking a large batches. And of course, very stupid thing, but it happens in every company I've experienced. Even in packaging, which is not any capital intensive, it's mostly labor intensive. There's a backlog of couple of days in packaging. I would call it criminal. Finishing. Typically in garment industry, this is the bottleneck. It takes a huge number of days in finishing. In an aerospace company, aerospace I'm talking, they had a backlog of inspection of 7 days. And of course, logistics can also happen. These days, logistics is the likelihood which can become your bottleneck because of a very special case. Operations measure overall equipment effectiveness of your bottleneck process or machine, if I can call it. If operation is your bottleneck, then by all means measure overall equipment effectiveness. Efficiency, simple words. And here I measure 24/7. 365 days a year, 24 hours a day, I'll measure. And my request would be that anything less than 80%, irrespective of industry, 80% on 24/7 should be the target to start with. Reduce setup time of bottleneck machine, because every minute wasted on the bottleneck, anywhere in the country or a company, the entire company is standing still. Exploit subordinate, I've already explained. And when operations is your bottleneck, means you don't have a constraint of orders. Please understand this carefully. You don't have constraint of orders. Right now, there's a constraint of operation. By all means, decide which customers to go for and which not customer. If you don't want to lose them, tell them that, look, my prices will have to go up. If prices are difficult, get better favorable credit terms or advance. I would today recommend, more important than anything else, get advance, reduce credit terms. Orders. If the constraint is orders, first requirement is measure on time and full. In most companies where I've worked, I've never found OTIF more than 10% except one, Thomson Press. I was pleasantly surprised. They had almost 70–80% on time and full. And we measure it very, very stringently. If one day an item or an order is delayed, the score is 0. If one part is missing, the score is 0. That is the way we measure OTIF. If you have order as a constraint, deliver smaller orders lots faster. Faster delivery time can be your success factor. USP, digitalize, promote online. We don't have to always sell going personally. Reduce prices only if absolutely necessary. These are broad bullet points. One will have to spend more time, and don't take one in isolation. We'll have to understand each one of them very carefully. In fact, I do plan to have a follow-up program next week, 5 o'clock to 7 o'clock. Let me know. I don't know who would like to do free webinar next week to cover or detail more items what I have not been able to do today. You can send us email, whosoever wants to attend. Then let's see how many people are there. We may decide to give it next week, same time. What is next week, Ira?
Yeah, I'm just checking. Checking the date.
Today is 23rd. It says 5th May, 5 o'clock to 7 o'clock.
Yeah. So you know, it's 6:45. So I just want to bring out a few points which are coming from everybody here, so that before we close, if you can just address. I'll tell you the 3-4 main questions that have come in, and you can decide how you want to take it. One, a lot of people said if you can explain cash velocity again. So maybe if you can just explain it with some simple numbers, because everybody is not able to do the compounding interest very fast. I'll tell you the other questions. Please see how you want to address it.
No, for the moment, don't tell me anything. Okay. Let me first finish cash velocity.
Okay.
Let's do the full kit part here. I want to explain a little bit on cash. Yes, I'll finish in 15 minutes. You see, this is a situation when we are precariously balanced. Look at the table. Let's say beginning of the month, we had $100 available. My fixed expenses, operating expense 50, money available for material purchase 50. Let us say my PVC percentage is 50, like the mobile I was talking. So possible sale will be 100. I buy the raw material for 50 and then it becomes 100. Money available next month, my cash to cash cycle time is 1 month. So money available next month is 100. And you can see I can come at exactly at the same situation if everything remains just like this, and my capacity utilization, fortunately, unfortunately, is just 50%. Now see what has happened. In the very first month when I was doing, some customer refused to pay me $10 for some reason, quality reduction, some rework, whatever it is, I don't know. But I did not get 100. I got just 90. Now, as I got 90, look what happened. My fixed expenses is 50. My money available for material purchase is 40. But now I can have a possible sale of 80. And the table is very simple. By the month of 50, I don't even have enough money even to take care of my fixed expenses. So forget about buying any material. I'm bankrupt, I'm close. It's very small decrease in cash can kill you. I'm not measuring any profit loss, etc. It's a stupid thing. The only thing which matters is cash. Now, opposite can also happen. Somewhere in the first month, somebody gave me another 10 units. I borrowed money free of interest for some reason. Somebody benevolent fund gave me, or the owner added equity of small item of 10. Look, exactly reverse happened. In the second month, now I have 110 available. 50 is my operating expense. Money available for buying material purchase is 60. Possible sale is 120. Money available next month is 120. Now, From 100, I came to 110. 110, I became 120. Now see what happened. At the end of the month, it becomes 180. Now, fourth month, we become 180. Now, fifth month has some interesting parameter. My opening cash is 180. My operating expense is 50. Money available for material purchase is 130. But possible sale is 200. The reason is I cannot produce more than 200. My capacity utilization will become 100%. At 100 sales, my capacity utilization was 50. So I only need material worth 100. So out of 130, I purchased material worth of 100. It converted into cash cycle, cash sale of 200, and I'm net left with 230. And next month, the same thing. All I'm explaining you through this process is that when you are in cash constraint, which many of us likely to be in the near future, if not already, then you can go down very fast, but you can come up also very rapidly. It is possible to do so before either orders, supplies, or operation becomes your bottleneck. Now I'm discussing cash velocity. Here is the formula. Now I'll explain in detail using an Excel sheet. First, look at the formula, please. I made a small mistake. I'll correct. You have a sale. We can measure for a product or for a unit for a company as a whole. For the timing, let me explain company as a whole. You know, let's say your monthly sale. Write that number in S. Then you know what was your pure variable cost in the month. Put it. Raised to power, you know your cash to cash velocity. Let us say your cash to cash velocity typically is 3 months. What I have observed. How I call it 3 months, sometimes 4. You have approximately 1 to 1.5 months of inventories and RM, WIP and receivables, not receivables, FG. Then typically you will have between 45 days, 1.5 months to 2 months of receivables. And for the time being, I'm not taking the credit from the vendor for the simple reason because it's very unlikely in the near future you will have a problem. You can get at the same payment terms what you were getting earlier. Already some people have said the vendors are demanding immediate payment, no credit anymore. So I'll just use an Excel sheet. So let's take S in one particular company, 100. Can everyone see it easily?
Yes, we can see.
So PVC percentage, I know in our country, most manufacturing companies have a PVC between 60 and 70. So I'm taking 65%. Is this clear? PVC will become 65. Now, let's say RM days, 15 days, 0.5 days, 0.5 months. WIP, another FG. I'm just taking some numbers. And then comes receivables. Let's say 1.5. How much it comes to cash cycle time? Can somebody add?
3 months.
Wonderful. So it comes to it. Now cash velocity. You see, now understand the concepts more important. We buy material worth of 65. We don't get any credit from our vendors. We start using this 65, and after 3 months, we get 100. So I'm going to use the formula for a compound interest. It's very simple. Bracket start S upon PVC raised to power, sorry. It has come to 15%. So a little bit up, little bit down, you will see that our cash velocity in most cases, I experience between 10 and 20%. Now, very simply, I want to explain you, let's say I have two choices. I can increase my price by 5%. I'm asking my customer, he's ready to give me a price by 5%. Now, he says, increase my credit period by 1 month. This is a decision we need to take. Should we do it or not? Let's see what happens. I'm changing it to 10. Sorry, I'll not do that. Now, when I increase my price, my variable cost does not go up. Is this clear to everyone? So my variable cost will remain 65, but my price has gone to 105. But my cash to cash cycle time has gone from 3 months to 4 months. Please look, we are giving him away a credit of 1 more month, but at a 5% increased price. Question is, should we do it or not? Assuming we are in cash constraint. Let's see. I don't know what the result. Have you seen something interesting? Your cash velocity actually has come down. It's not a good thing to do. Now let's go the other way around. Shall we give him a discount of 5%? 5% for 1 month's reduction in what you call credit period. So it is 95. And receivables have become 0.5. See what has happened. Your cash velocity has shifted from 15 to 21%. Is this clear? Ira, I want...
Yes, please share in chat if it's clear to everyone. Yes, we are getting responses. It's clear.
Okay. Basically, I'll stop sharing here. Just want to see everyone. You see, when you're in a cash constraint, cash velocity can be very, very helpful to take day-to-day decisions. It is not complicated at all. The only thing what matters right now is cash. Subir has asked, why should it call cash velocity? Okay, you have a choice to keep any other name, I don't worry. But my simple thing is, it is the money which is being increasing. At what rate it is increasing? What this percentage tells us that this is increasing at the rate of 15, 13%, etc. Now, Nitin Sharma said, oh, absolutely not. Are you from accounts department, finance? Nitin Sharma? No. So fine. This is the most stupid thing to do. Your fixed expenses are there irrespective whether you buy, sell or not. There's nothing to, a decision has to be taken. Where do we generate more money? Maybe I'll have to cover in the next one. So coming back, Subir, your question was, why should I call it cash velocity? Why? It is the rate at which cash is being generated. So Vikas Agarwal is saying, first example was increase credit period. When we increase credit periods, cash velocity was going down. All I was explaining you through this one in a little time, that look at this moment, more than increasing selling price or reducing variable cost, the more important thing is to reduce cash to cash cycle time. Cash to cash cycle time reduction is more important than anything else. And then check, by doing this, am I going up my cash velocity or am I going below cash velocity? Is this clear? Okay, I think we are coming very close. So quick question, one or two. Ira, you can take.
Yeah, so a couple of people asked how should they deal with the manpower constraint which is happening due to labor migration, and a few also said that they have receivables from government which they can't get faster.
Okay. Okay, government you can't. Let's first me talk about manpower cost. Okay, I'll give double the salary. I have a shortage of people, regular people are not coming, but I can get the regular people. If I get the regular people, I'm not able to get the regular people. I can get fresh people with the right skills, but I have to pay double the salary. Where is the, what should I do? How should I look at it? Look, very simple. Check one thing. If I increase my salaries to the new people, but I'll give them on a so-called piece rate. I'm giving them double, but piece rate. So I've converted my fixed rate, fixed expenses to variable one. In the process, please, one request. Before I explain the entire thing, people are already starting, this can't be done, hobena, it can't be done. Stop here. First, understand the concept. Please, you convert that, look, if I do this, what will happen to my sale? What will happen to my PVC? What will happen to my throughput? What will happen to operating expense? What will happen to my cash flow? Work it out. Don't say it can't be done. I'll show you the formula for cash velocity. Akash, hold on. Akansh. I'll just show you the formula. Don't worry about it. So coming back, my request would be any decision you want to take, any decision. Look what happens to T, I, and OE, and what happens to your free cash flow. If it makes sense, do it. If it doesn't make sense, don't do it. That's all. So let me finish because somebody is saying formula for cash velocity. I'm giving cash velocity. Can you see now?
Yeah.
So I think it's time to take leave. I'm already exceeding my time limit by 3 minutes. Don't want to, it's not fair on my part to take time from the family. So thank you very much. And we'll announce the next webinar quickly in the next couple of days.
Thank you very much.